Hello traders, and welcome to NOFT's Weekly Market Compass, where we help you navigate the week ahead. Our Weekly Market Compass is brought to you by our head trader Troy, who in between assisting traders in taking the next step in their careers, provides weekly and daily guidance in our live trading room every single day. Before we get into this week's guidance, we need to remind you that trading does carry significant risk, and all information in this video is just provided for educational purposes only and is not an offer or recommendation to trade future stocks, options, or Forex. From everyone here at NOFT, good hunting out there and happy trading. Here's Troy.
As normal, I look at forexfactory.com calendar and the outlook for the entire week here today, Monday, February 5th. You can see we have a yellow item here at 9:45. It's the final services PMI. Again, low impact. We have the ISM non-manufacturing PMI at 10 o'clock. That will affect the ES a little bit. And certainly at 11 o'clock with ECB President Draghi speaking, could definitely affect the euro and the dollar, as well as other dollar-denominated currencies. So 11 o'clock, I'll be definitely watching that because it will affect dollar-denominated currencies across the board. Of course, it will affect the euro as well. The other red items that are later in the evening, 7:30 p.m., got some Aussie dollar numbers for the 6A, retail sales, trade balance, and then at 10:30 you have a cash rate and the RBA, Royal Bank of Australia rate statement at 10:30. So there'll be definitely some action on the 6A. Their economy is doing very, very well. Of course, it is going to be affected by those, and I expect the rate statement to be neutral, but we'll see how that all pans out. On Tuesday, the only red items we have of consequence are for the New Zealand dollar, which is unemployment rate, employment change. U.S.-wise, Tuesday should be relatively quiet. The JOLTS job openings can sometimes be a mover if it's really, really way off. But on balance, it's a low impact as expected at 10 a.m. on Tuesday. Not much going on Tuesday. Tuesday should be a pretty quiet day. Wednesday, February 7th, not a lot of U.S., very little U.S. news. Of course, crude oil inventories at 10:30. Of course, that always moves crude oil. We were watching that, I believe, last week. I think it popped about 20-something ticks. That would be about the average, I would say, somewhere in there, if you want to play that post inventory. So not a lot going on Wednesday from a U.S. perspective. If you're a New Zealand dollar trader, it's a 6N is the futures contract for that. There'll definitely be some action around 3 p.m. For that. As we move a little bit farther, lots of events, but very little impact. So a lot of stuff going on could potentially affect currency markets more so than the ES or the indexes. I think the ES and the indexes are doing their own thing. On Thursday, we got a bunch of red numbers. Great Britain, 7 a.m. Inflation report, monetary statement, official bank rate, lots of good stuff going on. That would be for the 6B. There may actually be some interesting opportunities pre-market, at least U.S. pre-market, 7 a.m. on Thursday. Thursday's a travel day for me. I'll be traveling to Orlando to participate in the Money Show. Jason will also be participating in the Money Show event. So Kyle will be running the trade room on Thursday and Friday. I know it's going to sound silly, but I'm actually driving for a couple of reasons. First of all, our travel arrangement guy always waits to the last minute, and I always get a crappy flight. That's number one. And they always, because the flight is purchased late, you're always going to. I'll be going from Knoxville to Philadelphia or Knoxville to Charlotte, and then finally get down to Orlando. It's not a direct flight, and with the security these days, it used to be that the only time you would drive is if the drive was more than 4 or 5 hours away. It was still faster and cheaper and well, not cheaper, but easier to fly. And that's really changed over the last few years. I'm actually excited about a 10-hour drive because it'll probably take me about 10 hours when it's all said and done with to fly anyway, and I'll have all that stress of going through security and the connections and all that. They just destroyed flying. It's really sad. I guess I should short the airlines for sure. Seeing as I'm not going to fly, I'm going to drive instead. 10 hours. The upside is that I get to take whatever I want. The biggest suitcase I can pack. I can take my own giant bottle of shampoo for all of the hair on the top of my head without having to deal with any of that BS. So I'm actually looking forward to that drive. Got a couple books on tape to listen to. It's all good. That's happening on Thursday. Sure you all wanted to hear that. On Friday, we have a couple of red items for the CAD, for the Canadians, employment change and unemployment rate. At 8:30, those will be big 6C movers. Okay, so even though we look at currencies, the futures have currency contracts, currency futures contracts, which are very interesting to trade. Not a lot going on this week news-wise for the ES or others, so pretty benign week for news. With the exception there of Great Britain has a bunch of stuff, and the Aussies have a bunch of stuff. So got some good stuff for those going on this week. Let's take a look at some charts. Move this out of the way. Let's look at some nice big picture stuff here. We're looking at the crude oil. We were talking about this M pattern. You can see right here this M. Now it sort of almost looks like a head and shoulders, with the head not being as tall there, but at least a triple top. Looks like it was put in. Again, it's interesting how oil is continuing to sort of build a base up here, and that's interesting. The longer we stay up here, the better the opportunity could be for it to move higher. Of course, if it can break the 63 area, break below this little area here, we see we've got some, in this case, resistance forming a little bit here too, and that as we go forward, this becomes a decent area. Call that market structure, and we are just above that. So if we can stay above that, very bullish for crude oil. If we can break below 63, there's definitely some air down here. Waiting till we can get back into the 59 area, where the next level of really good resistance or support is. That being said, let's go ahead and look at gold. Gold, a little bit different pattern, but this is could be shoulder, head, shoulder. Could definitely be a much better defined head and shoulder pattern. I don't understand gold right at the moment. There's just nothing to warrant the prices being up this high politically, other than the underlying rumor that they're going to impeach Trump. Well, that remains to be seen. It is a lot of rhetoric. I think we're going to be pretty quiet through the month of February due to the Olympics. I think the Olympics causes the world in general to be less rhetoric driven. As we watch the athletes perform, certainly is a very patriotic thing for every country. So I wouldn't be surprised if the 3 weeks or whatever the Olympics will be a very little hot spot. North Korea, of course, North Korea is going to be part of this, the Olympic story because of proximity. But that being said, I just don't see any major world events going on that during the next 3 weeks that will be of particular market changing action there. The pound, I should say the notes continue to degrade. Again, this is when prices go down, interest rates go up. This is what the Fed wants. The numbers have been really good for the U.S. lately. I do expect them to raise the next time by a quarter point. And this will continue to go sideways to down, nothing out of the ordinary there. It's the one chart that we've got that has actually been relatively predictable and trending. So what's the word? Never fight the Fed.